Good morning and welcome everyone to the Moneycontrol live stream. You're watching the opening bell and I'm your host Nickey Mirchandani. Well, Indian equities are set to snap three-day losing streak following global cues. SGX Nifty at this point of time indicates a positive start coming in for the broader index. S&P 500 and Nasdaq jumped to their highest closing levels since August 2022. Wall Street ended higher on hopes that lawmakers in Washington will avert a first ever US default. Also, in terms of Asian equities, they were pulled lower by Chinese shares amidst a bit of weakness in the Hong Kong-listed technology stocks. FIIs, they have bought shares worth around 970 odd crore, and DIIs have sold shares worth around 849 odd crore. SBI reported profits which were higher than HDFC Bank after 8 years. Nexus Select Trust REIT is expected to debut on bourses today. If you talk about in terms of earnings, bunch of numbers that we are going to be tracking: Divi's Laboratories, Bharat Electronics, MCX for that matter, they'll be in focus ahead of quarterly earnings. But let us get going and discuss some stocks and strategy with Aamar Singh, Senior Vice President, Equity, Commodity and Currency at AngelOne. Good morning there.
Yeah, very good morning.
Aamar, do you think the texture of the market has been changing a little bit from what we've seen previously? 3 consecutive sessions, we've seen that profit booking actually creeping into the markets. A bit of dichotomy between the Nifty and Bank Nifty trend right now?
Yeah, I would say that Nifty, we've seen some sort of correction over the last 3 days, and I would say it's a healthy correction, because if you look at the way Nifty has rallied from almost 17,000 levels to 18,500. Currently, it's around 18,100. So clearly shows that it's a healthy sign. Only the key point here is that Nifty has now a very strong base coming at around the 17,950, 18,000 zone. So that I'm talking from a short-term perspective. So that technically is a very strong base for Nifty. So even if there is some further correction, it should not trade consistently below that level. And for any upside to be confirmed, it needs to trade above 18,300, 310, because that's, if you look at, that's the previous high for the last 2 days. So clearly, roughly around that level. So clearly shows that those who are long at those levels, they are in pain, because the market did correct significantly for the last couple of days. You are right in saying that Bank Nifty has got a different trend altogether, because if you look at Bank Nifty on the monthly charts, it gives a completely different picture as compared to Nifty on the monthly chart. So that's one of the reasons why we are not seeing some that sort of correction in Bank Nifty. And for Bank Nifty, the levels to watch out for, I would say, is that on the upside, yes, 44,144, that was the high that was made on 16th May. So on the upside, 44,000, 44,200 would be a zone of resistance. Whereas on the downside, if you look at, so somewhere around 43,300, 400 is going to be the zone. So it's going to be a 1,000 point here where the Bank Nifty is getting support. But as far as looking at the trend, as far as looking at the technical indicators, they clearly show that the uptrend remains intact. So this is more of a pause, which is, I would say, a healthy pause. And for quite some time, we've been talking about being on the buying side. So clearly shows that the trend is up. Yeah, if you look at the OI data, means I'm talking about. So in Nifty, we've seen some marginal short built up, but I don't read too much into that as of now, because that's not very significant. Whereas in Bank Nifty, we had long built up. So clearly shows that there is, as you said, that there is definitely a dichotomy between Nifty and Bank Nifty. And that seems to be here to stay till the time we don't see Nifty sustaining of the 18,400, 500 mark.
All right. So what's the strategy, Aamar, right now on Nifty and Bank Nifty? Bank Nifty, I'm assuming it's a buy on dips. For Nifty, is it sell on rallies?
I would say that Nifty also, if because Nifty's got a very strong range. If I look at the range in particular, so somewhere around 18,000 and 18,300. So the closer one is able to buy around the 18,000 marks. So it could be 18,050 or something, 50, 60. That could be a good level to buy, because you have to have a stop loss below 18,000. On the upside, any sustaining above 18,180, 160, 180, then there is a short-term upside trend towards the 18,250, 18,300 zone. So it's more of a range play, but definitely with a positive bias. And as I said, Bank Nifty continues to trade stronger as compared to Nifty.
In the markets like this, where Nifty and Bank Nifty are completely in different direction, at least when it comes to the chart reading, what do you make out of the other three profitable ideas?
Yeah, so one I would say is Max Health. One can definitely look at this stock. This is one stock. If you look at it's bucked the trend. If you look at Nifty and the major indices, so the stock is very strong on the medium-term charts, on the long-term charts. The stock has had a major breakout. So it was unable to breach the 495, 500 zone. It's trading at its all-time, I would say, highs, and the stock is not showing any signs of declining momentum even on the short term. So clearly shows that there is more upside to this stock. So any pullback in the stock, currently it's around 530, 435. So any pullback in the stock towards 525, 530, ideally that can be a good level with a stop loss below 497 and a target of 563 on the upside. That's one stock to look at from the healthcare sector. And the other stock I would recommend is Exide. So this is one stock which has been, if you look at it technically, strong on the charts. And what interesting thing, what we've witnessed is that the stock made a high of almost 200 levels in December 2022. And then again, it's not been able to breach that level, but currently it's trading above that level. And with significant volumes, we've seen that breakout. So what it effectively means is that there is more upside to the stock, breaching a key level and sustaining above that level with on heavy volumes, and technical indicators also pointing towards some strength, be it on the long-term charts, monthly or the weekly, or even the daily charts. So this is one stock one can definitely look at. So it's currently around 205 odd levels. So any pullback towards 200, 202 ideally can be a good level to enter the stock with a stop loss of 193 on the downside and a target of 225 on the upside.
Sure, Aamar. I'm just going to address them quickly. Crestwood has made in changes to Asia ex-Japan portfolio, upping the investment in Axis Bank, where it's initiated a 5% weight. Investment in L&T has increased by 1%. Investment in ICICI Lombard has been removed, and investment in HDFC Bank and RIL, that has been reduced by 1%. Of course, we're going to be addressing in stocks and news and just in a jiffy out there before going back to Aamar out there. Aamar, SBI, that's the one which kind of reported in profits which were higher than back of state, HDFC Bank after 8 years, more than what the estimates were, but not really as exciting as we would like. What do you make out of it on charts? Do you think it's a good strategy to play on the stock right now?
I would say if you look at the SBI on the charts, SBI is more of mixed. The trend is mixed. Yeah, I would say the long-term charts clearly points towards more of indecisiveness in the chart, whereas the short-term indicators, technical indicators, point towards bullish momentum. But that's not building very strong because the stock definitely did manage to rally from its recent lows in March. So somewhere around 500, currently it's around 580 or so. But if for any meaningful rally, the stock needs to sustain over the 600 mark. So it's very, I would say, hardly 4% from the current levels, but it needs to sustain over the 600 mark for any further meaningful rally in the stock. So I would say more of consolidation. On the downside, if you look at the previous top, which the stock had made in March, so that was around 560, 65. So immediate support for the stock is around 550, 560. Upside resistance is around 600. So it's more of a range play with a positive bias from a short-term perspective.
Sure, and also your view on ITC. How could one look at it post the numbers? The numbers have been, of course, above estimates. Major of its chunk is driven by cigarettes, which is almost 1/3 of its revenue, and that volume is coming higher, thereby weighing ahead on the profitability of the company. What do you make out of it on the charts?
See, if you look at ITC had a dream run, almost 100%. I would say increase in the stock price from January last year. So clearly, that's a major gain. Technically on the charts, the stock continues to be strong, and the momentum is still there. Short-term momentum has declined, so also that points to some sort of I would say I would say, some sort of extreme buying interest which was there. Now that seems to be declining, and also there's some profit booking happening in the stock. So on the downside, if you look at it, the stock has got now very strong support somewhere around its previous top. So previous top was in March, so that was around 393 or so. So on the downside, the stock has got support around 390, 400 zone. Whereas on the upside, it seems to be capped around 430. So one needs to be slightly cautious, wait for some meaningful correction. But yes, the stock is definitely in a strong uptrend from a long-term perspective.
All right, strong uptrend coming in for ITC in terms of long-term perspective after the rally that we've seen. And other stocks of news that we're looking at: State Bank of India, Interglobe Aviation, United Spirits, and Pfizer, amongst other. Now, JP Morgan on SBI have suggested an overweight rating and a target price of 720. It's spoken about the net income being ahead of what the street was estimating, driven by lower provisioning. Operating profits too were in line, and the net interest margins have improved 10 basis points sequentially. Only negative was the elevated capex. Macquarie on United Spirits. Now, USL is also where the longs have been building up, and Macquarie, after results, have maintained the underperform rating and the target price of 650, says the EBITDA was way below estimates, and the miss has been driven by deterioration in the sales mix. The growth has been led by the Diageo Scotch portfolio, for which the company earns only 10% distributor margin. However, it's reported in healthy volume and value growth in prestige segment. That's the word coming in for USL. Interglobe, well, if you look at the numbers, inline set of numbers, positive outlook. The company has maintained the guidance of 15% ASK growth in this financial year, and it expects better usual spread in the first quarter. The guidance has been led by some yield hardening versus sharp fall in crude, offsetting the cost pressure for the company. So that's the word coming in for the three of the names that we have on the list. We're going to be addressing the markets in just a bit, just to give a flavor of how the markets have been stacking up for you. Look at the Nifty 50 right now. We're looking at a positive opening coming in for Nifty finally, with gains of around 0.2% out there, 18,150 mark, about that level for Nifty 50. Talk about Bank Nifty Index, because we're seeing the dichotomy trend, at least when it comes to the trade setup, playing out for Bank Nifty Index. Bank Nifty, we're seeing gains to an extent of 0.25% out there. If you talk about, beg your pardon, Bank Nifty, the gains is to an extent of close to 0.4% out there, 43,920 mark right now. So it's, it's steadily inching around that 44,000 mark, 80 points away or thereabouts from the crucial level. Needs to be seen if that has been scaled and new highs can be scaled by Bank Nifty Index overall. Do remember that it's a buy on dips coming in for Bank Nifty. Nifty, on the other hand, is being on a little consolidated range out there. Mid-cap index, we're seeing gains, somewhat a flattish trend coming in by mid-cap, but with positive bias coming in for mid-cap. Talk about small cap index. There also we're seeing splendid gains, actually decent gains, I would say, 0.25% out there. So a bit of outperformance coming in from small cap. Mid cap, however, at this point of time seems to be flattish in terms of the sectoral indices. How have they stacked up? Metal index right now down and out with losses of around more than 0.1%. In terms of other sectoral indices that we can see, IT with gains of around 0.5%. More than that, defense pack is clearly holding up in green after a slew of numbers have been reported, and probably factoring in all the losses that we've seen. Nifty Infra with gains of around 0.1% out there. And in terms of other sectoral indices that we have, Pharma index right now, a bit of caution setting in for the pharma index. Losses to an extent of more than 0.25%. Talk about FMCG, talk about realty. Consumption basket too seems to be down and out. Well, it's not really taken a knock per se, but flat bias, flattish trend with negative bias. FMCG right now is a bit of a flattish trend coming in for FMCG as well, right? IT has been holding up. Realty at this point of time is trading in red with losses of more than 0.5% after the run that we've seen from the index for a couple of days, right? IT index, rightly, when we just pointed out before, is trading in green with gains of more than 0.5%. So overall, it's a mixed trend stacking up right now for the entire defensive space, FMCG, IT, pharma, And Nifty 50 again, if you talk about the levels out there, 18,150 mark has been clearly held on to. Top Nifty gainers that we have on the list: State Bank of India, shining in green for you, HCL Tech, Ultratech Cement, Infosys, Tech Mahindra, and Asian Paints. So IT and State Bank of India clearly are the top gainers that we have on the list right now. In terms of the top losers that we have on the list, let's something like Eicher Motors. Well, the auto pack seems to be taking a beating out there. TV's Lab, Tata Consumer Products, and also in terms of the other top losers that we have, ITC, UPL, and Maruti Suzuki. These are the companies which are actually down and out. Let's pull up the charts for Interglobe Aviation and USL because they have reported on numbers. Interglobe Aviation is first, and probably we'll be looking at USL too. Both of them have reported in numbers. Interglobe Aviation's right now, flattest trend playing out for this one. A bit with positive bias remains to be seen. How does that stack up? And for United Spirits, where it's a miss coming on for United Spirits overall, the earnings have been a little bit of disappointment out there for the company. That needs to be also spoken about, right? USL is something that needs to be watched out for. In terms of State Bank of India, we are seeing losses to an extent, profits as compared to HDFC Bank, which is higher than the one in 8 years. It's for the first time that the profits have been higher than HDFC Bank, which is a private sector bank, after 8 years. So that's quite a feat in itself, and the numbers have been higher than estimates. And on account of that, you're seeing some amount of momentum building in for State Bank of India, which is one of the top gainers right now on the list that we have. Aamar, come in on this one. I'm just going to check with you. After the markets have opened, what do you make out of it? Does your strategy remain intact? And the stocks that you'd like to now play on to?
I would say that one can definitely, there's another stock which is good to look at is Coal India. So this is one stock. What we've seen is that the stock hasn't corrected significantly post a sharp up move from almost 200 mark. Currently it's around 240 odd levels. And technically, this is also one stock which seems to be on an uptrend and from a long-term perspective. However, having said that, I would say the stock on the upside has got strong resistance around 250 odd levels. So that's one level where one can look at some booking some profits. But otherwise, I would say this stock is still in a very strong uptrend. So any correction in the stock can be used as a buying opportunity. The stock now has got very strong support base coming around the 220 mark.
All right, Aamar, we'll leave it at that. Thank you so much for taking out the time and speaking to us this morning.
Thank you.
All right, it's a big day for REIT overall. If you talk about the sector, now Blackstone Nexus Select Trust REIT is listing, and the rival Brookfield REITs has announced a big $1.4 billion acquisition in partnership with GIC. The space is clearly getting interesting out there, but we are going to be bringing in our fundamental guest and addressing in the fundamental story. A lot needs to be spoken about. There have been changes when it comes to the new age companies' perspective, and also banking space needs to be discussed much in detail. Siddhartha Khemka, the head of research retail from Motilal Oswal, has joined us right now. Good morning there.
Good morning, Nickey.
Good morning. Siddharth, I'm going to start off by asking your assessment of State Bank of India. The profits have been higher than that of HDFC Bank after 8 years. Steady set of numbers overall. The asset quality has improved better than what at least HDFC Bank reported. This is the first time that has happened in 8 years. A bit of excitement out there. But overall, do the numbers excite you? And even from a very aerial view, do you think PSU banks at this point of time are better placed than that of private sector banks, or it's the latter which is going to lead the run for the financial in this year?
Yeah, Nickey. So if you look at the overall banking space, we were expecting the sector to lead in terms of the earnings delivery for this quarter, and rightly so, they have delivered in line or better than expectation. So be it the private banking space or the PSUs, the expectation was from PSUs are much higher, and that is because of the low base, the high provisions of the past that led to a sharp outperformance in terms of the growth that they have reported. And most of the PSUs have been focusing towards the corporate lending side, which has seen a sharp growth and improvement, helping them to see the sharp growth in the overall financials. So I think the PSUs in terms of the earnings would continue to deliver stronger growth compared to some of the private banks, which are a much diversified book, which helps them in the down cycle, but in the up cycle, in the credit loan up cycle, that is where the balanced comes, helps them to steady for a steady and stable growth. But PSUs, as I said, on a low base, they had been facing the NPAs, the asset quality issues for a very long time, and now with the credit cycle picking up, they are making the most of it. NIMs have seen significant expansion, and with valuations at a steep discount compared to the private banking space, that is where we are seeing the stock price outperformance from some of the PSU banks. So coming back to SBI results, pretty strong numbers, helped by improvement in margins, lower provisions. NI was up almost 30%. Margins expanded 10 basis points on a sequential basis to 3.6%. So overall, if you look at net profit for the full financial year, was up almost 60%. So that's kind of a very strong number. And slippages have remained under control with healthy recoveries and upgrades, which resulted in GNPAs and NNPAs improving further. That apart, subsidiaries' performance have been pretty strong. Overall, we believe that SBI would continue to focus on steady growth. Business growth would remain healthy, driven by growth across key segments. NIMs would kind of normalize from here on. We don't expect further expansion in NIMs, and that is the case for across the banks, with banks now passing on the interest rate hike benefits on the liability side as well, plus the base effect coming into play. Overall, I think SBI remains one of our best or preferred picks within the overall banking space. We have a target price of 700 on SBI. But I think some of the private banks would also do well, be it an ICICI, Axis Bank, which would also report steady growth. But in terms of pecking order, we could say that SBI, followed by ICICI and Axis Bank, would be our preferred bets within the entire banking space.
All right, so SBI followed by ICICI Bank, followed by Axis. ICICI Bank too reported splendid set of numbers. It fired in all the cylinders out there in terms of the expectation that people had from ICICI Bank. But Chris Wood has made some changes out there in the India long-only portfolio, where it's removed in the investment in ICICI Lombard and HDFC Life. These are the two specific names that catch the attention out there. With regards to the space, what's your view out there? And do you think the outlook for the space is relatively grim?
Yeah, I think the sector has been facing a lot of headwinds right from the pandemic days, and post that we have seen certain regulatory changes, the taxations changes, which has impacted the sector. While the long-term outlook for the entire insurance space is positive, given that India is still witnessing a strong growth, increasing penetration of insurance. We are grossly underinsured as a country, with the life expectancy going up. I think the out-of-pocket expenses, healthcare expenses also going up. I think insurance will pick up. The key is to look at some of the companies which are kind of delivering steady growth quarter after quarter. So overall, I think we have a positive outlook. The near-term earnings could remain under pressure because of the reasons we have seen in the current environment. But if you look at the entire space, we believe that SBI Life stands out clearly in terms of earnings delivery, in terms of operating efficiencies. The contribution profit is pretty steady. The value of new business margins, the VNB margins have been pretty strong, and return ratios wise also, I think they are at the highest with about 22% ROEs for FY24. And finally, valuations are also comfortable for SBI Life Insurance. So within the entire insurance space, I would say that our preferred pick would be SBI Life. We have a buy rating with a target price of 1500, which gives a good 25% upside from current levels.
All right, so that's the bullish view coming in on SBI Life. But in a bit of interesting, topic around the new age companies out there, there is a little bit of chatter around the new age companies of how they disappointed and how these companies and the management came out with their commentaries suggesting that the outlook at least is brighter. Today, Zomato will be reporting in the numbers. Paytm has already reported in numbers where it's ahead of expectation. In terms of the entire new age basket, something in the like of Zomato, Delivery, Paytm for that matter, put all the new age companies together. What do you like? And also your view separately on Zomato, because that's going to be the company which will be reporting in the numbers today.
So, Nickey, I think we have seen a lot of excitement towards the new age companies getting listed, and then the price discovery started happening. People started focusing on the profitability of these companies, given that these are some of them are definitely startups. They did not have that profitability, or the path to profitability was a lot hazy. But what has happened over the last 1.5 years is that some of them have started focusing on profitability, especially if you look at what is happening with Zomato, Swiggy. They both are looking at on a adjusted EBITDA basis. They have started reporting profitability, while the fully profitability, or you can say the net profitability is still 1 or 2 years away. We have had a look at some of them, especially if you say within the new age companies, Zomato and Paytm in particular. So my preference within the entire new age would be a Paytm. We believe that given that the company is a market leader in the payment services business. It's a leading payment app, fintech enterprises. The company has achieved EBITDA break-even in Q3, much earlier of its guidance. They were expecting the same to achieve by September quarter of FY24, but they have achieved that in Q3 itself. The company is clearly focusing on two strategies to improve profitability. One is cross-selling products to its network of the retail customers, and on the second, clearly focusing on lending business. So they are helping originate loans to the merchants that again is being held by its core payment business, where the network effect is coming into play. So this two-pronged strategy is helping them improve the profitability on the overall basis. If you look at on the lending side, the latest numbers, the current run rate on an annualized basis has reached a very high number of 50,000 crores of lending that they originate from their network merchants. Plus the payment devices that they are keeping in the merchant stores, that they are charging about 100 rupees or so, and that is also started contributing to the overall profit. So we believe that the steady rise in the consumer and merchant base will help it grow the overall business over the next 2 years. We expect an overall, which is including the ESOPs cost, so overall EBITDA break-even by FY24, and we expect contribution margins to improve to almost 57-58% by FY25 from about 30% in FY22. So overall, I think the Paytm looks good within the fintech, within the new age companies. We have a one-day target price of around 865. So that is a stock that one can definitely focus on in the current environment.
All right, Siddharth, thank you so much for the view. We're just going to leave it at that. Paytm is the one that we need to keep an eye out on. Zomato is going to be the one that will be reporting in numbers, but Siddharth typically likes, at this point of time, Paytm, given the kind of performance it has shown right from Q3. Siddharth, thank you so much for taking out the time and speaking to us this morning. With this, it's a wrap and goodbye from the entire team who puts this piece together. Thank you so much, guys, for watching. And please do post your feedback for us in the comment section below. Follow us on the link at the bottom of your screen. And for rest of the updates, stay tuned into moneycontrol.com and Moneycontrol app.